Hey everyone, what's going on? CryptoVatsik here with a technical analysis video for you. Today I'm going to be covering FLR. And if you enjoy these videos, I would really appreciate it if you smash the like button and subscribe to the channel for future updates. As always, nothing of what you're about to see is considered financial advice. Okay, you guys, let's get into the chart. First things first, let's drop to the high time frame. We'll go to the weekly first. Okay, so clearly FLR has seen a really bullish move out of the accumulation and bottom that it put in last year. And what we've seen is impulsive legs to the upside to get out of that accumulation range and start testing resistances above. And what I am currently seeing on this correction that we are seeing right now in front of us, which may be coming to its completion in this candle that we've got currently, is essentially I'm just seeing flips of resistance. So if you take your eye to the green box here, this is clearly just a high time frame reclaim of a breakdown origin, meaning a level that price lost from and capitulated. Price came up, formed this consolidating wedge right here, okay, where that resistance was really suppressing price at the time until we got another impulsive leg to the upside, smashing that resistance, which was red previously, but is now a beautiful high time frame support level. And if you take your attention down to the gray boxes down here, we'll see the exact same thing. Okay, we've got breakdown origins that are always to the left. So back here, we had this level that was temporarily formed. Price came back up, consolidated for a bit at it until ultimately breaching it, and so on and so on. So you'll see a pattern now if we look above at our red box here. This is not necessarily a breakdown origin, but it's the most clear resistance that I can see right now. I'm calling this wick that we got on this candle a deviation simply because price was going parabolic at the time. So we had a bit of a blow off the top and naturally it was due for a correction. But this red zone is still a current resistance zone on the high time frame. And I do anticipate that this zone will turn green at some point, and it's only a matter of time, and we're doing really well so far in the current weekly candle. When we corrected down to our green flipped support zone here, we had 0 high time frame candles, at least on the weekly, closing inside of that zone with only wicks to the downside. So a very clearly flipped level there, and the vice versa, a massive wick to the upside above red. So a very clear resistance area still. Now above red, you'll see this gray zone that I've marked. Okay. Yes. On the first weekly candle that this exchange had, it wicked all the way up to 20+ cents. However, I don't count that as this asset's all-time high, and I would count anything above the local high that we've currently got, which is the current range high that we are working with here. I would consider above that as price discovery, at which point there will be 0 historical data to work with at that point. There will be no price action to work with that we can use against current price action. Therefore, it'll be a different ball game. But for now, we've still got a clear range to work with here with our range high and our range low. So let's drop down to the daily time frame. Okay, so as I said, we've clearly got a beautiful range here off our massive swing high and swing low, and ultimately coming down off our blow off the top and retesting our green support zone that was flipped on the high time frame, if you remember from that point of breakdown over here. So ultimately, we've had a massive bounce now off of that. We've had a bullish break in market structure, meaning as price was chopping down like this, making lower high after lower high, we've ultimately got our first higher high here in comparison to this previous lower high, broke the bearish market structure, retested it with success, and continued the push. That was the first trigger for a trend reversal. The second trigger for me would have been taking the fibs when we started the correction, taking our fib from the high down to the first impulsive leg of the move, which I believe to be right here, and don't believe this as impulsive. Therefore, we take the fib extension to the beginning of the impulse to the high, and we mark out where is the 618. Well, you'll notice the 618 marked out our range low that we are currently trading within right here. Now, of course, all of this is done in hindsight, but I want to review it because I do think it helps identify in the future trend reversals or temporary trend reversals in price action. And there's a lot of signs that can help you identify this in the future. So the fib was trigger number 2. The market structure break was trigger 1. If we drop down to the 12-hour time frame, let's take a look at relative strength index. Now you will notice on the 12-hour time frame relative strength index, we got a bullish divergence when we put in this low here, and then we put in a lower low. RSI put in a low and put in a higher low thereafter, marking a lower low in price and a higher low trend off the bottom on RSI, signaling a trend reversal. It's better to stick on bullish divergences using RSI on the high time frame. I wouldn't suggest going lower than the 12-hour or 6-hour. The higher the time frame, typically the more impactful it can be, but that was trigger 3, signaling for a trend reversal. And again, this is all done in hindsight, but it's very easy to see in hindsight. once the move has happened, but it will be able to give you those signs for a very similar move on different assets in the future. So price has now maintained a healthy structure. Okay, we've had this correction. We've reclaimed the 100 EMA here. We came down and retested with success our green support zone. We've got a clear market structure break. We've tested the 618 and now looks to be putting in an impulsive leg, beginning the next leg up. That doesn't mean that it is just straight up from here and that you should just long any chance you get, because I do believe we are still range bound within our range high and our range low, meaning there's definitely possibility to bounce off of our quarter quadrant ranges. Okay, the upper quarter quadrant being right here and the lower quarter quadrant being down there. And naturally, these are also additional signals as to price gaining strength or weakness that typically not all traders will see. But you'll notice our market structure breakdown here was pretty much right on the lower quarter quadrant equilibrium. So basically, if you imagine the range low being 0%, the lower quarter quadrant being 25%, of course our 50% EQ, and 75, and of course 100. Okay, so moving all the way up, essentially 5 major levels within our range to work with, and to use as a reference, not as an absolute. Meaning when price was able to reclaim the quarter quadrant here, that was a good sign that price was regaining strength, but you'd be looking for those other signs. As I said, the market structure break on high time frame, where was that retest zone, referencing RSI, if there's any bullish divergences on high time frame, do we have that typical 3 drives down, and using that kind of data to formulate our confluence. Either way, now is where price is starting to attempt to reclaim levels within our range. Okay, so near our EQ here, there's an area of breakdown point which price looks to be attempting to reclaim. It doesn't mean we're out of the woods yet. It could easily come down, retest this prior high, and then we reclaim the EQ and put the upper quarter quadrant to the test at that point. So that's what I mean by don't just blindly buy, but I do believe that we are beginning the next leg up. Otherwise, price could, essentially reclaim the EQ with major strength and then start to push the upper quadrant sooner than anticipated. Time will tell. We'll have to drill into the lower time frame to evaluate it, but so far looking very healthy. Again, we were still under major high time frame resistance when we had our blow off the top parabolic move back here. We got harshly rejected off of red, okay? Because as I said, above red, I consider to be pretty much price discovery. So I think once it surpasses that, it becomes the wild, wild west. Price might just fly, but it does have to surpass that next objective. We do see volume starting to come back after this tapering off here. Pretty quiet in terms of volume, but now we are starting to see it come back slowly here. But you'll notice this happens time and time again before we get impulsive legs. We have consolidation at resistance, such as this, where volume kind of tapers off, and then we get our impulsive leg to the upside, volume steps in. Same thing, consolidation at resistance, volume tapers off until volume steps back in, and we get that impulsive leg. And I see no difference with this, given the fact that price is fractal. I just see that we are in a large consolidation range here, where price could consolidate potentially for much longer than anticipated until we ultimately get that breakout. That is going to depend on Bitcoin and Ethereum, how this is going to look. But given the relative strength in the market, I don't think it will take that long. I do think that we'll get potentially chances in corrections on the way up, but I think that we'll probably break out of this range relatively soon, given the fact that we've got 4 or 5 major signals that we've got a trend reversal here, and price looks to be impulsive, building upon the next leg. It still has work to do. As I said, there is a breakdown origin here and the EQ of this range that it needs to reclaim. So if this candle ends up closing right on that EQ, then who's to say that we can't just continue to come down and consolidate on or above green just a little bit more. But I'll change my tune pretty quickly as soon as we reclaim red. If we start to get real strength above the equilibrium here and we don't retest this prior high, at least on some low time frame, then yeah, I think sure we reclaim red depending on how that looks, and then we take it to price discovery. As for targets above, let's take our FIB extension. We'll go to the daily time frame. As I said, from the beginning of the impulse of the leg to the blow off the top and to our corrective leg. And there is an assumption in here that this is the bottom of that corrective leg. I think it's probably a fair assumption, even if we do consolidate back down towards green, it's assuming that this is the low, and from there on we'll just be putting in higher macro lows until an ultimate trend is formed and we break out of the range. So I just want to make clear that that is an assumption when using this tool, is that we have corrected to our bottom at this point, forming a macro higher low on a reclaimed support level in green. now, if we look at the FIB extension tool, we start to see these FIB levels. This is a tool that helps when you do enter price discovery. It gives you something to work with, because if you look left, there is nothing to work with. So you enter price discovery. Traders often have a very difficult time because they will see price start to go very volatile, and they find it hard to form where the consolidation is, where the lows are going to be. We get capitulation events that wick right back up, especially in crypto, and then follow that same trend. It's very nasty to work with. I highly recommend staying away from leverage in price discovery, but at least we've got some fibs that can help us work with some levels, such as a 1-to-1 extension, which is very typical out of a first impulsive leg to the upside. Even on a macro scale, typically you will see 1-to-1 extensions met or even possibly surpassed, and then eventually getting that correction. But then looking to the upside, there are even further. That we got the 1-6-1-8 and then the 2-6-1-8. So just a tool that helps with a bit of a roadmap in price discovery, but these are to be used again as references and not as absolutes. But as I said, even if price is bullish right now, we are still technically range bound within my parameters here. We've got a clear swing high and a swing low to work with. So it's very nice to see because it gives us a really good range to work with, gives us a good equilibrium to work with. But if we see anything like we've just recently seen, which is consolidation at resistance until it is impulsed out, you want to see these wedges forming ascending triangles with impulses to the upside. This means demand is stepping in. We are getting a supply pinch from accumulation. We see volume stepping in, and we see a clear reversal from a bear market to a bull market. And then using those high time frame levels to establish major corrections and points or locations of where they could correct down to. Okay, so you break a level, you put in a correction, you expect to retest it. Just like we got down here, we break a level, we come down, retest it. Break a level, come down, retest it. With green, we broke a level, came down, retested it. And I'm expecting that with red, we would break the level and even potentially come down and retest it. So play it safe, leave emotions to the side, stay away from leverage, in my opinion. Just spot and chill. You'll walk away a lot better and you'll sleep at night. Anyways, that's it for today, you guys. I want to thank you all for joining again. And if you did enjoy this video, I would really appreciate it if you smash the like button and subscribe to the channel for future updates. And I'll catch you later this week. Peace.